Great, thank you. My name is Jeffrey Moore, although Scott Moore, people know me by Moore. But we're here to talk today about Eurosund Mining, which is responsible development of strategic metals within the European Union. Four categories we'd like to focus on here is leadership. So the executive team and the board has built and operated large-scale operations throughout the world, particularly in Africa, Katanga Mining, Tenke Fungurume. We certainly have a leading the sector towards a more responsible and engaged way of developing the project in terms of dry stack tailings, no cyanide, minimal impact as such going forward. And we have certainly a strong thematic in providing strategic metals, primarily copper, to the European Union from the European Union. Our strategic asset is the Rovina Valley project located in Romania. It's roughly 7 million ounces of gold and 233,000 tons of copper already measured and indicated. So that's roughly 10 million gold equivalent ounces. So it's a very large project, porphyry project. We certainly have strong ESG commitments, clear environmental, social, and governance commitments are aligned with internationally recognized standards, primarily UN Sustainable Development Goals. We do have buy-in at all levels due to the committed and secured social license in the area, which is a key part of moving any mining project forward. We have an exploitation license or mining license ratified by the national government in Romania, and we recently, in June of this year, got an opportunity agreement signed by all the local communities and the county to move the project into the next phase of permitting. Certainly, we did demonstrate a strong investment opportunity here. Access to the EU's next gold copper producer. We have completed a definitive feasibility study in April of this year, highlighting a very robust project. Definitely a low risk, high reward valuation gap to our peers on trading on a 0.1 PNAV basis. But again, highlighting a low impact mining approach and a clear pathway to unlocking value. Just skip ahead here. Again, the thematic here again is a strong issue about delivering copper from Europe to Europe, and certainly being part of that strategic critical metal supply into the European economy. Where we are, we're located in Romania, so a full member of the European Union, long-standing mining jurisdiction, excellent established infrastructure. This is first world. You drive to the site on 4-lane paved highways. The mining code provides general principles of transparency, free competition, strong rule of law, and transparent financial system. So it's easy to get money into Romania, and more importantly, easy to get money out of Romania. What we've highlighted in our DFS study here is a very large and scalable operation, initial operation in roughly 17 years. Again, highlighting 10 million gold equivalent ounces and measured and indicated. Production scenarios about 106,000 ounces of gold and 9,000 tons of copper for those 17 years. That's roughly 146,000 gold equivalent ounces a year. Base case free cash flow, just over $700 million. Again, that's based at 1550 gold and 330 copper. So these are the highlights again of the feasibility study. We only produce a copper concentrate, so we produce a 22% copper con with about 100 grams of gold. Clean, no nasties in it, so very marketable concentrate. There's 2 smelters within 400 kilometers of the project, one in Serbia, one in Bulgaria. Project economics, again, highly levered to metal prices here. So this study was done at 1550 gold and 330 copper. Base case net present value of $447 million. At spot prices today, copper and gold, the NPV is $1 billion. So again, highly levered to both gold and copper. Over the life of mine, we're about 65% gold, 35% copper on a revenue basis. We talked a bit about what our alignments are. Again, clear ESG commitments, and this is more and more in focus with investors these days, particularly generalist investors, is that strong alignment to sustainable development goals. Social inclusion, gender equality, we're focused on that. 25% of our workforce is women. We're actively supporting healthcare and physical activity within the local areas, and we're committed to improving that along the way, and very strong buy-in from the local communities. Economic development, a big part of it in Romania is 80% of the mining royalties inure to the local communities, both the county and the affected community. So it's a big part of why mines are moving forward in this jurisdiction. and certainly, generating 1,500 to 2,000 direct and indirect jobs in a town that had a mine for 80 years. It's one of the reasons why we've been successful with all the local communities. And again, today, on the responsible operations side of things, we do dry stack tailings, so no wet tailings, which has been an issue in many jurisdictions. Because we do dry stack, we certainly eliminate a huge use of water, so we're down to about 95% recirculated water, only about 5% makeup. Column flotation is how we recover, so crush, grind, float, no cyanide, again, which is a big buzzword in Europe for sure, and Romania in particular, having had a couple of wet tailings dam failures in the past. We can currently revegetate the area, so you're not left with a big environmental legacy at the end. We actually backfill one pit with the waste from the second pit, and actually then reforest as we go along. And in Romania, we, by law, are required to plant 300% more trees than we cut down on the project. So again, when we look at the whole environmental aspect of this project, it's certainly cutting edge and sector leading. And again, just some quick figures here. $447 million NPV. Again, $1 billion at spot pricing, 20% IRR. First production target is in 2024. And we'll skip to what is the key components here. What we've done today, significant achievements. Again, big asset, so M&I ounces of roughly 10 million ounces. We do have that mining license signed. We do have a DFS completed. We do have the opportunity agreement completed. We have filed our rezoning plan in the area and initiated our strategic environmental assessment process. Upcoming catalysts, again, in the next couple of quarters, we will be listing on the London Stock Exchange in Q1. One of the gating items was a tech report, so we're actually updating the tech report in order to have that, to finish off that process. And we expect during 2022 to receive our environmental impact assessment, our land usage permit, offtake agreements will be negotiated at that point, as well as project finance. Again, we've already had initial discussions on project finance, particularly with European development banks like KfW. So, where we are in terms of moving up the value scale, we think that'll unlock a lot of value. Again, we're a bit binary with permitting in Romania and elsewhere, but we believe that, we're looking in here a sustainable production of one of Europe's largest copper gold projects coming up, concurrent reclamation to minimize environmental footprints, and again, we already have development of additional assets already defined with a third deposit for production beyond 17 years. Capital structure, you'll see we have a very large institutional shareholding base. Ruffer here in London is our largest shareholder. Franklin and ASA, both large funds out of California, Baupost, Connecticut, Ixios out of Paris, APAC out of Hong Kong. So even though we are a Canadian company, we do have a very institutional and international shareholder base, and we have two analysts that cover us, both out of the UK, Justin Chanett-Sprott and Roger Bell at Hannam. So ideally, that's one of the reasons why we're looking to come to London, is to be part of that European story and focus on growing the shareholder base here in London. Thanks. Thank you very much.